Hi guys, in this video I'd like to talk about two things. First, because we just hit 1,000 subscribers, I'd like to talk to you about my experiences with trading and how I started this channel. In the second part of this video, I'm going to answer some of your questions and share with you things like where I get my information, how I choose my stocks, how I evaluate stocks, and other questions. And if you like this video, give me a thumbs up, write me some comments. I'm always eager to hear from you. But before we jump into this video, I just want to say two words. 1,000 subscribers. I'm very excited, guys. 4 months ago when I started this channel, I didn't know how it was going to go, what the response is going to be, but the response was overwhelming. People like watching my videos. So thank you very much to everybody who's subscribed, who's watching, who's sharing, who's writing me comments. Thank you again, and I hope we can grow this channel in the future together. So I just want to share with you my experiences with trading and investing and how I started this. When I started this, it was back in 1998. I graduated from college and I invested my first $7,000, and I pretty much lost it immediately because I didn't have any clue what I was doing. Then I invested again, and of course I lost it again because I was completely clueless, and I thought that I could take the market by storm, but not so easy. And when I realized that, it took me years to develop skills that I have right now, because market is not very forgiving. If you deposit the money and you start trading and you have no clue, pretty much you have no chance. So after September 11 happened and I lost my job in IT, which is information technology, I was doing software development, and I was invited by my friend who had a small brokerage company, and I started trading with him, and I started learning some of the techniques that he was doing. And at the same time I was studying for Series 7, which is a brokerage exam, and I actually learned a lot of things from that. So over the years I realized that trading in the market or investing in the market is not as easy as it seems to be. You have to have a lot of technical knowledge, you have to have a lot of fundamental knowledge on macroeconomics, very important. And all this I had to take in and study, and took a lot of courses, read a lot of books, and that helped me a lot in the market, trading or investing. So basically from 2015 I started trading pretty much full time, and I'm still trading full time. I grew my small little portfolio into a 7-figure portfolio, and it's doing very well today. If you want to see my portfolio or how I'm trading on pretty much everyday basis, you can check out my Patreon link in the description of this video. So last year, two of my relatives in Minnesota started asking me questions about the stock market, how to trade on the stock market, how to make money on the stock market, and different techniques how to do it. So I started to consult them, and we were doing it together. And one day I realized that maybe if that helps them, maybe it could help other people, especially considering the fact that pretty much every morning they were asking me questions: what's hot on the stock market, what are we trading, and stuff like that. So I decided to create this YouTube channel so I could help other people besides them, and maybe they can benefit, and I don't have to answer them questions every morning. I'm just kidding. I enjoyed those questions actually. So that's how the channel has started. So the goal of mine and the goal of this channel is to help people to make money, and hopefully with the daily videos that I post and my in-depth analysis videos that I post, I can help you make wise decisions about your trading and investment on the stock market. Where do I get my information and what are my sources? Every day about 6:30 in the morning I wake up and start scanning through financial news on sites like CNBC, Bloomberg, Reuters, Yahoo Finance, MarketWatch, and so on. And once I gather a majority of the information, I open my laptop and I start scanning through the live feed on my thinkorswim application. Then I check out earnings reports from yesterday and this morning, and those are available on the Yahoo earnings calendar or Whisper Numbers or other sites. And then I check out analyst upgrades or downgrades on pretty much on thinkorswim. When researching a company, what are the key indicators to determine if it's worth investing? When I evaluate a company, there are several things that I look at. First of all, you have to look at the company through the prism of the current macroeconomic environment. A perfect example of that is Microsoft. Microsoft fits this COVID-19 shutdown like a glove. Why? Because many people stay at home, work from home, so a lot of companies are moving to the cloud or using cloud a lot more than before. Also, they have Microsoft Teams, Skype, they have a gaming console, Xbox, and they sell their Surface laptops, which people will buy more and more if they are going to continue working from home. An example of a company that doesn't work in this current environment or shutdown is a company like Carnival Cruises. Their business is completely and literally shut down. They have to take on a huge debt to maintain their operations while paying junk bond prices for their debt. I think they have to pay like 11.5% interest on some of their debt, and while they're not cruising, they're losing almost $1 billion in liquidity every single month. I don't know if people just in a snap of a finger will easily forget what happened to cruise ships in this pandemic. So the recovery for the cruise line industry will be very, very slow. Second thing that I look at is a balance sheet. And on the balance sheet, I look at the cash and cash alternatives and also its relationship to debt levels. Because if the levels of debt for the company is too high, it's going to be very difficult for the company to survive. Another important metric is the growth. If the company is growing a lot, maybe you can forgive them not to have high earnings. The next thing that I use is price to earnings ratio. It's very important for the company to have a lower price to earnings ratio, but it's not paramount to have a good price to earnings ratio. For example, companies like Amazon, they have very high price to earnings ratio, but their growth rate is very high. And that makes this company very attractive. So another metric that I use is PEG, price to earnings to growth. After I look at the fundamentals, I look at the charts and do a technical analysis on the charts. So for example, I look at the pockets of resistance, pockets of supports, I look at 50-day moving average, 200-day moving averages, and determine if at this point of time this is a good opportunity to get into the stock. This combination of fundamental and technical analysis gives me a better picture of what to do with the stock. Next question is a brief overview behind the stock dividend portfolio importance or the value to having one versus not having one, as well as the pros you like about it and possible cons. The obvious reason for owning dividend stocks is that they pay shareholders real cash on quarterly or monthly basis. You don't have to wait for the company to come up with a new line of products or get FDA approval for a new drug. Every quarter or sometimes even every month, you get a bunch of greenbacks put in your account. For example, a company like AT&T pays a 6.73% yield to shareholders, which is a lot better than what you can get from your bank or even most bonds. And that's great, but at the same time, many people forget that when you buy shares of a company in order to get regular dividends, first and foremost, you're buying a stock. Unlike your savings account, which is FDIC insured, there are no guarantees with the stock. Also, the companies that pay generous dividends are usually big industrials, oil, business credit companies, and REITs. And if you look at which companies were hit the most during this most recent COVID-19 sell-off, it's exactly these type of companies. So many of them had to slash their dividends, if not to eliminate them completely. Plus, many of those stocks got disseminated, especially high-paying dividend REITs. If you invested in them, you would probably find yourself deep in the red column. So when you invest in a high-dividend stock, the first thing you have to consider is the performance and fundamentals of that company. And then, if you think this company is fundamentally sound, then the dividend yield that it pays is a cherry on top. Another question is, how can you determine if the stock is undervalued, overvalued, or correctly valued? There is no right or wrong answer for this question because people use different metrics to evaluate companies. For example, someone like Warren Buffett is using the exact formula to determine the intrinsic value of a company. Other people use different metrics. For me, growth and gaining market share is more important than the current fair value of the stock. A perfect example of that is Tesla. Tesla is one of the most shorted, if not the most shorted stock on Wall Street. Because many money managers don't understand why it could be trading at this crazy high valuation. Why they don't understand? Because they use traditional value metric formulas for this stock. And based on those formulas, Tesla's valuation is ridiculously high. But if you take a step back and think what percentage of overall cars will be electric in 5 to 10 years and how many of those cars Tesla will sell, where their autonomous taxi driving business will be, where their solar and battery business will be, then you may get to a different conclusion. You may actually think that Tesla stock is not crazy expensive, but rather cheap. So I hope that answers some of your questions, guys. Again, thank you so much for watching my videos, for your support. Also, please subscribe, share, write me some comments. Until next time.